Well, we're broadly staying in the, in the same kind of arena, but we're talking about different different business line. Delivery is what we want to talk about. Mangalam is here with, this one and why it's in focus. Mangalam, over to you.
Oh, well, good morning. So if you look at Delivery, the stock ever since they announced the acquisition of Ecom Express has rallied about 41%. This, at a time of the Nifty, just rallied about 8%. So there has been a strong outperformance on hopes that there is industry consolidation and Delivery would stand to benefit from that. But Jefferies thinks otherwise. Why is that? Because one of their bigger concerns is their client, Meesho, which accounts for nearly 40 to 50% of their, Ecom parcel sales. They have been insourcing logistics. So Meesho started their own captive logistics, and that's always a worry when a company is, the third-party logistics player, and that they believe could further pressurize their e-com parcel business. If you look at it, they believe that e-commerce itself, after the post-COVID high CAGR of almost 30% over the last 5 years, could moderate over the next 5 years to about 10%. So growth itself is coming down, and in light of that, other companies are using their captive logistics, some of their bigger clients, and that would mean that their market share could nearly halve to 34% by FY28, and which implies that there could be case for a downside on their overall business despite the consolidation of e-commerce express. So they have cut their target price from 500 to 315 on Delivery. But apart from all of this, the other concern for Delivery, as Abneesh earlier pointed out as well, PE exits could be one of the reasons for a lot of these PE-owned companies. For Delivery, there is no listed promoter, but a lot of funds own the stock. So maybe any sort of liquidity event out there is one of the risks as well.
All right. Mangalam, thanks very much for that. So Delivery down about 1.25% or so. Let's just